Good afternoon, everyone, and welcome to Full Transparency Trading from Scratch. And over the first two videos, we talked about what a candle is, and we broke down a candle, how they open, how they close, etc. Today, we're going to teach you how to read these candles so that you can actually day trade. And as you can see, we're going to start on over here on TradingView.com on my charts on the 4-hour time frame. I do majority of my leveling off of the 4-hour time frame. So what you're using the candles for is to make levels. All right, you use these candles to find out levels of where the stock market is, where it might go, and where it's currently going. So it's currently trending up on the 4-hour candle. As you can see, we started way down here 4 hours ago. But to clean this up, I'm going to click on MES. Right now we're on ES, which is the S&P 500 mini future. So majority of what I'm going to be teaching you is going to be based off of trading futures. Okay, let's go ahead and continue forward. I actually should have entered a trade here, but we're going to wait until 1 o'clock. There should be some really good trades at 1 o'clock. Click on MES, which is the S&P 500 futures minis or micros. This is the original minis, and this is micros. Minis trade for as little as $12.50 per contract, while micros can trade for $1.25 per contract. So we're going to go over to micros since we're doing an teaching type of a tape. So as you can see on Wednesday I should say, we had this large gap up, right, which doesn't happen very often, but happened on Wednesday where we gapped up quite a bit, and then we consolidated, and then we went down a little bit, and then on Friday, as we enter 1800 hours yesterday, starts Friday. So when you're trading futures, the market is open from 1800 or 6 p.m. Eastern Standard Time until 4:59 p.m. Eastern Standard Time the next day. So that is one trading day in the market. So especially if you're trading these evaluation accounts or these accounts and you're trying to reach your 10 days, if you start the night before, it counts towards the following day. Okay, because that is a full 24-hour trading day. Well, it's 23-hour trading day is from 6 p.m. until 4:59 p.m. or 5 o'clock. 5 o'clock, the market is officially closed. So you're looking at these candles and you see that the first couple of candles at 6 o'clock consolidated. Consolidation means that they kind of went sideways. They didn't really go up. They didn't really go down. Now, even with consolidation, what I want you to understand is there's no such thing as a market actually going sideways. Inside of these sideways moving candles is plenty of up and down movement. Sometimes it's just slower than other times. So now we're going to move forward to a smaller time frame. We start on the 4-hour. We would put a line here as our highest point where there's bodies and not just a wick. We'll explain the wick again. Is right here. This is the body of the candle. This is the highest point. So to me, this is the truest zone on the 4-hour time frame. And then as we go down, our current day's zone would be at the body of these candles here. And that is the truest bottom part of the zone. Yes, it moves down through here, and there's all of this movement and everything on the 4-hour. And as we reduce, you'll see smaller time frames. But those are the main two zones. The third zone would start right here, the body of these candles. Now this is called supply up here at the top. Then down in the bottom is called a demand zone. A supply zone is like the roof of a house. It's hard to bust through the roof of your house, correct? But every now and again, you'll see here, you'll have situations where you can break through the roof of your house. And then the demand zone is like the foundation of your house or the basement, right? You can go into the basement, but usually you won't break through the basement until, through the foundation. So that's why it's called the demand zone. These are the sellers up top, and these are the buyers down low, and we'll go into that plenty more, but right now this is just about candles. So now we're going to go over to the 1-hour time frame. Okay, the 1-hour time frame is confirming what I just showed you on the 4-hour time frame, and that's how that works. You want to show the 1-hour time frame and show that there's a channel that is following what's happening on the 4-hour time frame. So I drew this little box out here. Let's turn that off now. And let's zoom in on just this area. So this area is the current day's market of which we're trading. This is 5 o'clock in the morning. Everything fits inside of this little box that I created. This is the top of the box. This is the bottom of the box. No matter what's happened today, the reality is even though we broke through the bottom of the box is actually right here at 54.71, and the top of the box is actually right here at 55.08, right? And that is important to understand when reading candles. This first candle opened at the top and pushed down from where this candle closed, and it pushed down further, and every candle prior to that did the same thing. We hit an all-time low for the day, not for the, the time that we've been trading, not for months and years, but an all-time low for the day. The next candle opens going to the upside, but pushed down first, and then went up and up and up and up till it became a green candle and pushed up. The next candle started where this candle ended here, put down, and then started to go up, and then created a newer high there, and changed the character of what was going on with this candle here. Once we surpass this area, that's called a change of character. What's happening in the stock market has changed. We were going down and down and down, and now we surpassed this candle here with a body, and we have officially started going up, and we've been going up ever since. Even though we have these large wicks where there are pullbacks, the reality is that we're just going up. Let me move this down to right here. Okay, now we're going to go to an even smaller time frame where you can see the box, and that is the 15-minute time frame. And now you start to see each individual candle a little bit better. Let's start by resetting this, and then we're going to enlarge our box from here. Boop, 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 doom. And then boom, now you can really see it inside of that box. Like, oh, cool. This red line, we came down to the red line, we broke through a little bit, we went above the red line, and we never really came back to the red line after that for all of these 15 minutes. This candle's going up, that candle meets in the middle and pulls down, that candle meets in the middle and pulls up, that candle meets in the middle and starts pulling down, then we go up, 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 and then we reach halfway to the ceiling. Notice we're not to the ceiling yet. Again, guys, we're only halfway to the ceiling, and we're having a hard time breaking through halfway. We're about to break through halfway on this current candle, but because we were having a hard time breaking through halfway, this is what's called a range. So you see that green line there where we're trying to break through? That was the range. The range was 54.90. And now we're above the range. So now we're in the top half of the trading day. As we approach 12:30 in the afternoon and 1 o'clock in the afternoon and so on, we've entered the second half of the trading day where we fell all the way down, and now we're climbing our way back up. And essentially, that is what you're trying to do, is find levels that the candles are at, what direction the candles are going in, and where to take your trade in those candles. So now we'll draw a line. This line indicates a downwards trend. The next line indicates an upwards trend. How do you know it's an upwards trend? Well, because all of the candles are above this line here. All of the candles would be technically below a line and going down. So you know what? We'll go ahead and put this line where it belongs. This line belongs right here. So all of the candles are below that line, and they're staying below that line. So we're in a downwards trend all the way to this red line here, which is the 200 EMA, one of the most important EMAs. This green line is called the 9 EMA, and this yellow line is called the 23 EMA, for me in particular. If I hit this thing here, it's going to show that I have a 20 EMA in red. And the reason that I use red is because red means what? Stop. Yellow means slow down, and then green means go. So we hit that green line and we've been going. We hit that green line and we kept going. You see what I mean? We hit the yellow line and sometimes we stop. We slow down a little bit. And then we go through the yellow line and we're back above the green line and we're going. We hit that red line and we stop. Majority of the time when we hit this red line at different time frames, we are going to stop. So now we're finally above halfway. We're above 50% of the downwards move from this morning. And we're going to go over to the 5-minute now. Now in the 5-minute, that box gets way bigger and you can see a lot more of what's happening. And you start to say to yourself, what I thought was us being above a red line is actually us being below a red line. And that is true, but in reality, what you're seeing is we are what's called inside of a channel. The same way I created this box here, the exact same thing happens for the 15-minute and the 5-minute. The 15 minutes line is down there, while the 5 minutes line is up here. 5-minute and 15-minute being your truest lines. We are above the 1-minute line. We are currently above the 5-minute line. And we are way above the 15-minute line. But before we were below, so we were trading inside of a little channel. This bottom line would be considered the 15-minute line. Let's go ahead and draw 1 and 5. Excuse my drawing because this is a weird little pin there. I can actually put text on here for you guys to help you out. We'll start with the text bubble right here. And this will be called your supply zone. And then the demand zone is the buyers, because you buy up and you sell down. Yes, you buy the whole time, right? But in reality, you buy up and you sell down.